Welcome back, folks. So the market is slightly under pressure, down about 40 odd points, but the stock on our radar is Titan right now. We have Sanjay Purohit, the whole-time director and group chief executive officer of Sapphire Foods, who will also be joining us later on the show. But we have now Ashok Sonthalia, who's the chief financial officer at Titan, who's with us. Mr. Sonthalia, good morning and thanks a lot for joining in. There's, of course, an operational miss, which I'll talk about in a bit, and I'm sure there's competitive intensity which you're facing. But I want to understand on the top line front, right? Since we're getting into a period where there is Adhik Maas, which perhaps could affect, it's an inauspicious period, so it could affect sales. Q3 onwards, there'll be a lower share of weddings as well. Do you think this could be an impediment to your revenue growth? And what are you targeting in terms of revenue growth by the end of the year?
We are, of course, looking for high teen growth numbers for FY24 as well. I would believe we talked about that July month has been, again, almost as good as Q1. So we have not seen Adhik Maas impact that way. Q2 is always a diamond activation quarter for us. So we had some new collections which we launched towards June end and marketing campaigns around that. And now the diamond activation is getting very, very good response, which is started towards July end. So it's very difficult, Sonia, that way to predict these days. A little bit volatility in the market. Consumer sentiment oscillating sometime to lukewarm to coming out in large number for buying jewelry. Our strategy has been respond to some of those good periods where sentiment is good, prices are good, come out with campaigns, design, offers, etc. to maximize at that point of time. I think volatility and all these things are going to stay. We have to kind of manage within that. And we are still hoping that high teen growth for FY24 is possible.
So I just have one follow-up here. Given that there's so much competitive intensity and the market is still a bit challenging, Mr. Sonthalia, do you reckon that the most prudent strategy would be to focus on volumes and revenues, and some of that could come at the cost of margins? Since you spoke about some of these schemes, discounts, etc., that you'll be offering in order to move forward, what could the most prudent strategy be in a challenging time like this?
So our philosophy, and which we have talked about, that growth is first, market share gain is first, and then deliver at a consistent margin profile. And that is what we are trying to do. We spoke about our long-term growth strategy about jewelry business, which we articulated on FY22 base as 2.5x by FY27. We are very much on track to that. 12 to 13% margin guidance also remains for the full year. There is seasonality from quarter to quarter, and margin will go up and down slightly. Q1 generally have slightly weaker. Also must remind all of your viewers and who track our stock that FY23 margin profile, we always spoke about that. It has got one-off benefit which are not going to stay. So keeping all the points, our investments in Q1, our gold exchange program in Q1, and that is what the margin we planned for Q1. I do understand that market perhaps had a higher expectation from us.
Yeah. No, so do they need to be guided a little lower? Mr. Sonthalia, good morning. Prashant here. Because that's the point. Margins are down in the jewelry business, down sharply, 250 basis points. You alluded to some of the reasons, like, for example, FY23 was there were one-offs, they were never going. So is this the normalization we should expect, and what would you guide for the full year, sir, in the jewelry business?
We reiterated 12 to 13% is the band within which we will operate. Within 12-13%, I don't want to guide any further. If you look at, Prashant, several years, say last 3-4 years, Q1 being at 11.5 and still we delivering 12 to 13% has been the trend. So maybe FY23, that one-off situation has created an expectation as well as disappointment. But we, as I told you, we are as per our plan, and we are not getting concerned about that. Competitive intensity is there. It has been there for last 12 to 18 months. And I don't believe there is any more pressure coming because of competition. It is more the consumer sentiment oscillation, the market gold price volatility, that is more concerning for us, and that is what we kind of design our responses to.
All right. Hi, good morning, Mr. Sonthalia. This is Nigel on this side. I had a two-part question to you. One is that your current market share is around 7%, and you've said in the next few years it goes to double digits. By the end of this year, what kind of market share are you looking at? Point number one. And the studded share, well, it's holding at around the 26% odd. For quarter two, quarter four, where do you see this number headed?
So in quarter two, this should be certainly upward of 30% plus, Joan. I can't tell how much higher, but definitely 30% plus number we are expecting. Same thing can happen in quarter four also. Overall, I think we are reaching or might exceed the pre-pandemic level. We were just behind till last year. This year, we do hope, because of our campaigns around studded jewelry, high-value studded jewelry, getting very good traction. So we are hopeful that we can at least come to pre-pandemic level and maybe slightly better off from there. So that's.
And what about market share, sir? Market share from around 7%. You want to go to double digits. By the end of this year, are you outgrowing the market? So will you gain on that market share? Will you go up by 100, 150 basis points for this year itself? And also just to revise, what was the pre-pandemic level of the studded business contribution? Mid-30s?
It was on the retail sales basis about 30%, on the retail sales. On the reported revenue number could be, but we generally track this on secondary sales basis. Secondary sales basis, it was 30%, close to 30%. So that is where we want to go back to, for sure. Market share, Nigel, it is best estimate which we do. There is no industry-wide data. We believe we are at 7% and we should go towards 7.5 to 8% at the end of FY24. When we talked about 10% by FY27, it was on the basis of that 2.5x target which we fixed on the base of FY22. And we are on track to deliver that. Considering the historical industry dynamics, if we deliver that, our expectation is that it should be 10%. It is an outcome number. If industry dynamics change, industry expands faster than that. But we are more focused on that 2.5x scale of jewelry business based FY22 level.
Okay, so 2.5 times scale up of the jewelry business. All right, I want to understand a little bit about what's happening in the watches business as well. Are you facing a lot of competitive intensity there? Your margins over there have come in at around 11.5%. You had a target of 12 to 13%. Do you think you could make that? And, if you could just give us a sense of which way things are headed.
So margin, there was one-off in watch division this time, which costed 1% to the division. Otherwise, it would have been 12.5%. So we are fairly confident that 12 to 13% on the full year basis, they should do. And they have potential to do that, maybe more towards 13% gradually. But because quarter one is at 11.5, so I will restrict myself between 12 and 13%. Analog watches have grown 8%. Within analog watches, we are finding premium segments are doing well. So we are having very well-defined strategy and action plans and everything getting in place, that how do we, from mid-premium segment, we start inching towards premium segment. And you will see in coming quarters from our side what steps we are taking.
Okay, just one final question.
Yeah.
Got it. Sorry, we're running out of time. So just wanted one final view on what's happening in the eyewear business, because over there, Lenskart has been picking up quite a bit. Are you facing a big threat there? And what kind of average growth can you eke out?
So I'm not saying that we are facing big threat, but growth, what we would like to have, we are falling short of that. We did 10, 11%. We would have liked a high teen growth number coming from this segment also. We are taking our actions, but yes, you are right. Profitability is sorted in that business because we want a profitable growth, not growth at any cost. But yeah, we would love that business also start delivering high teen growth number. But till that happens, really can't comment or project or predict for that.
Okay, all right. Thanks a lot, Mr. Sonthalia, for stopping by and giving us all those details. Wishing you all the best for the remainder of this year. For the time.